So yesterday, in the last class, we were discussing business risk, and we completed one more question of Sunshine Hotel Group. Today, we will be doing the last question of this chapter, which is Redback Sports, and then you people will be given a homework of 3 questions so that you people can attempt those questions and get them marked. Okay. If I give a quick review of business risk, this was the first topic which we are studying in audit planning chapter, which is our first chapter. In business risk, we have studied that the approach to write an answer, write a point, is to identify a risk, discuss the impact of that risk, and then give an evaluative comment. We have written answer of Grohol Company. Then we discussed answer of Cannoli Company. Then we discussed the Sunshine Hotel Group or the Dove Company answer. And then today we are discussing the last question, which is Huntsman Company or Redback Sports. Now, something important about this question is that it is a business risk question on new exam format. Earlier, you had question 1 of 35 marks. But after changing exam formats in September 2018, you have a 50 marks question in question number 1. Now, the problem with this 50 marks question is that a student has to read a long question. The 35 marks question was of 2 pages, but this 50 marks question is of like 4 to 5 pages. So it takes some time to read the question, but if you will concentrate, you will understand the technique because the writing approach is still the same. Okay? So we are starting with this 4th question. I want you all to concentrate on it and understand the writing approach, that how I am developing the answer. Now, you are a manager in the audit department of Huntsman and Company, a firm of chartered certified accountants, responsible for the audit of several companies and for evaluating the acceptance decision in respect of potential new audit clients. One of your audit client is Redback Sports, which operates a chain of sports and leisure centers across the country. The company has a financial year end 28th February 2009, and you are about to start planning the audit. Stella Cross, the audit engagement partner, met with the company's finance director last week to discuss business developments in the year and recent financial performance. In addition, Stella has been approached by Mick Emu, the managing director of Emu Gyms. Mick has inquired regarding whether Huntsman and Company provide the company with an audit or limited assurance review, and Stella would like you to evaluate this request. Huntsman and Company provide payroll services to Emu Gyms and has assisted Mick with his personal tax return. Mick also has a suspicion that several employees are carrying out a fraud at the company and has asked whether an audit or limited assurance review would have alerted him earlier to the situation. So we have read the introduction of the question, but there is no information for us regarding business risk. So we will continue reading. You are provided with the following exhibits, and then we are provided with a list of exhibits. We have to respond to the instructions of the email. 46 marks, and professional marks are 4. Okay. So this first page was of no use because there was no information provided relating to business risk. Now, email from audit engagement partner to audit manager from Stella Cross, audit engagement partner for Redback Sports, and then we have a subject. I have provided you with information in form of number of exhibits which you should use to help with planning the audit of Redback Sports for the year 28th February. Using this information, evaluate the business risk. Now we have 8 marks and each business risk gives 1.5 marks. So how many risks do we have to write? We have to write 5 risks in this question. Okay? We have to write 5 risks in this question so that we can have 7.5 marks. And then one last mark. We will calculate any trend or like that. Okay? So let's start this question from Exhibit 2. Okay, let's start. So coming back to the question, Exhibit 2, notes of a meeting held on 30th November 2008. Meeting attendees: Stella Cross, Audit Engagement Partner, Huntsman Company; Anita Bay, Finance Director. Business background: Redback Sports operate 20 sport and leisure centers across the country. Okay. Each center has a large gym and a swimming pool, and many have tennis and badminton court. Okay. Now, and many have tennis and badminton court. Given the nature of the company operation, it has to comply with health and safety regulations set by the national regulatory body. So whenever you have a discussion about regulations, I discuss a risk of non-compliance, and its facilities are inspected regularly to ensure that all regulations are being followed and for the company to retain its operating license. So the first risk which we can refer is the risk of non-compliance, because a risk exists that company may not comply with health and safety regulations. Okay. Now, the company is not listed and therefore does not need to comply with local corporate governance regulations. However, the company's chief operating officer and the chairman consider it good practice to have an independent input to the board. And there are 2 non-executive directors. One of the non-executive directors is a leisure industry expert who was a chairman of a rival company, Lyre Leisure, for 10 years. The second non-executive is an academic who specializes in organizational behavior and who has written several books on performance management in the sport and leisure industry. Now you can say that despite that company, Redback Sports is not a listed company, but still they have corporate governance. But that corporate governance is not very strong. It's weak, CG. Because 2 non-executive directors are only available on board. As per good corporate governance, there should be a balance of executive directors and non-executive directors. So apparently they don't have a good corporate governance, but still we will read through and find if we have any other information on it also. The company's board has approved a plan to expand through acquiring other leisure and sport facility providers. The strategy is not likely to be implemented for another 2 years, when the board would like the first acquisition to take place. However, potential target companies will be identified in the next 12 to 18 months. Ultimately, the board would like to seek a flotation of the company within 5 years. And they consider that expanding the company would improve profits and make a stock exchange listing more feasible. Okay, now, Redback Sports Company has a small internal audit department with 2 staff who report to finance director. Now see, internal auditor is reporting to finance director, which again shows that company has weak corporate governance, because if the internal auditor will report to finance director, obviously the problems of problems of finance department will not be identified. I'm repeating it again. If internal auditor is reporting to finance director, then problems of finance department itself will not be identified. Why they will not be identified? Because obviously if internal auditor is reporting to finance director, they will not be identifying the irregularities happening in finance department. As the board does not have an audit committee, when board does not have an audit committee, this also shows that company has a weak corporate governance. So you can say that Radback Sports Company only has 2 non-executive directors. It lacks an audit committee, and internal auditor reports to finance director. This all shows that company has weak corporate governance. Okay, like due to internal auditor reporting to finance director, the problems of finance will be overlooked. Due to lack of audit committee, there will be no independent appraisal of the board, because audit committee is responsible to appraise the performance of the board. And then you can write that despite that company is not listed, therefore CG is not a legal requirement, but still lack of CG will increase the risk of fraud and error in the company. I'm repeating it again, and I want you all to concentrate on it. Due to weak corporate governance, there is always a risk. Due to weak corporate governance, there is always a risk that there will be fraud, there will be errors, there will be issues which are overlooked. Okay. So 2 entities in the board show weak CG. Internal auditor reporting to finance director shows weak CG. Lack of audit committee shows weak corporate governance. So if we consider all of this data together, this creates a risk that the organization has a weak corporate governance structure, and this weak structure may lead to some fraud, some error, or issues being overlooked. The company is currently unlisted. They don't have a requirement of CG, but still having good corporate governance is better for company. Or you can argue that company has a plan to get listed in another 5 years, so they need a good corporate governance moving forward. So you can write a risk on weak corporate governance, that as company has a weak corporate governance structure, they may be facing a risk. That there will be some fraud or errors going on in the company. The company offers a membership scheme whereby for an annual subscription, members can use the facility at any of the centers. Customers who are not members can pay to access for a day under the company's pay-as-you-go plan. The membership scheme accounts for approximately 85% of the company's revenue, with the remaining revenue resulting from pay-as-you-go sales. So 85% of the revenue comes from membership, and the remaining 15% come from pay-as-you-go sales, which is the customers who are not members, if they want to attend our gym, they just pay for the services and they use it. Business developments in the year. The industry is competitive And the company's strategy is to encourage customers to renew their membership and to attract new members by offering a range of new activities. According to the finance director, a successful initiative which started in March 2008 is the Healthy Kids campaign. This offers children 2 hours coaching per week in a range of sports, including swimming and tennis. This coaching is provided as free as part of their parents' membership, and it has proved to be very successful. The finance director estimates that it has led to 3,000 new members since it was launched. Now, after reading this paragraph, I have 2 things. Now, first of all, Healthy Kids can be used as an evaluative comment. In health and safety regulations. That when you are dealing with children, your risk to health and safety regulations increase. Why do it increase? Because the kids are difficult to handle and they have a greater exposure to accident. Like you have identified above, that the company has to comply with health and safety regulations set by national regulatory body, and its facilities are inspected regularly to ensure that regulations are being followed and for the company to retain its license. So you can give an evaluative comment in this risk that health and safety regulations will be at a greater risk of non-compliance due to involvement of kids. And then there was 3,000 new members so that you can refer the capacity of gyms. That obviously if you are involving 3,000 new members, it may create capacity issues in your gym. Okay. So I'm reading up the question. What is expected from you people is that we have to understand the scenario before we write a risk. Okay? Now, in June 2008, the company opened a new coastal sport and leisure center, as well as offering the usual facilities, also as a scuba diving center and offer water sports facilities. So you can say that if a company has opened a new coastal center, it will be a cash outflow. It will be a major cash outflow, which may create a liquidity concern. An investment of $12 million was also made. So this you can also refer as a cash outflow. Now always remember that whenever company is spending its funds, you can refer that these are the cash outflows being made. And if the cash outflows are too much, you can argue that company may face a liquidity concern moving forward. An investment of $12 million was also made in new gym equipments across all centers to ensure that the company offers the most modern facility to its customers. An advertising campaign has been launched to promote the company brand generally and to make customers aware of the investments in facilities which have been made. As part of this campaign, the company paid $1 million to a famous athlete to endorse the company for a period of 2 years. The athlete will appear at the opening of the new Coastal Sports Center and has agreed to feature in poster advertisement for the next 2 years. So again, you can argue that this spending of $1 million, for a payment to famous athlete is also a cash outflow, and this all accumulated amount will create a burden on the company's cash flow position. Okay? Now, the Red Bag Sports is also involved with government to help unemployed people to have access to sports facilities. The company received a grant of $2 million in September 2008, under the terms of which it allows unemployed people 3 hours of free access to its facilities per month. By the end of November, 33,900 free hours of the facility use have been provided under this scheme. The government intends to run the initiative scheme for 3 years to promote a long-term health of participants. Now, you can argue that first of all, you are allowing unemployed people. This may have adverse impact on members. Now, always remember that if a member pays a premium amount for a leisure facility, he obviously wants to feel privileged. And if the unemployed people are also using that same facility, he will lose that privilege, and then he will not be willing to pay that premium amount. Like, for example, I always say that if you purchase a membership of a 5-star hotel gym so that you can go and exercise in that 5-star hotel gym, you can go and practice in that 5-star hotel gym, and you pay a premium membership for that, and suddenly your driver and your cook is also exercising in that gym, then there is no point to pay a premium membership. Obviously, when you pay a premium amount somewhere, you want to feel privileged. Like you want to create a difference that, see, I can use that facility, but the other person cannot. And this is why you are paying the premium amount. But if through government scheme, we are allowing unemployed people, then obviously the people who paid premium for it will get annoyed, and the market is competitive. The market is competitive. They may switch. Now, if we talk about 33,900 free hours. Now see, this scheme was launched in September 2008, and by end of November, it is 3 months. 33,900 hours have been used, and each person was provided with 3 hours free access per month. So if you divide 33,900 hours by 3 months, you will get 11,300 hours per month. And each member has used 3 hours per month. So this gives us 3,766 visitors. Now you can say that if there are 3,766 visitors, this may create capacity issue because we already have 3,000 new members due to Healthy Kit campaign. We also have free children membership who attend as a part of their parents' membership. And then these 3,766 visitors a month due to government initiative, this all will add up, and this will create capacity issues for our gym. A new data management system has been introduced. Now, always remember this inherent risk, that whenever there is a new system, you can argue that there is a business risk that this new system may plan data in a wrong manner. It may give wrong data to management for decision making. It may give wrong data for planning, and as a result, the problems may arise that due to this new system, the decision-making process and the budgeting process of the company may get affected, which integrates membership information with accounting software. This allows more efficient management of the customer database, which is used extensively for the marketing purpose. Again, you can argue that as it is a new system and if it contains any flaws, then it will affect the overall marketing strategy also. As it is a new system, it carries a risk that it may not give the correct data and the decision-making process may get affected. Further, as it is also used to manage data for marketing purpose, there is a risk that the data provided by the system is not correct and the information for marketing purpose is wrong, as well as providing timely information to management. Data from the previous system was transferred to new system in July 2008, and two systems ran in parallel for 2 months while training was given to staff and new system was monitored. So you can say that this action of the management has mitigated the risk by some extent. One feature of the new system is that it records and reports free hours of access provided to unemployed people, which the company has to report on monthly basis to the government. So now, if this new system will record wrong data, government may recall grant, because in that case, we will be reporting the wrong data to the government, and obviously government would not be supporting this particular act, because if we report wrong data to government, government may simply recall the grant on the basis that we lack integrity. Okay. So till now, if I gather my points, the first point which we identified was a risk of non-compliance. The second point we identified was weak corporate governance. The third point which we can argue is capacity of gyms. Then you can argue that company has done too many cash outflows during the year. Okay. Then you can argue that due to unemployed people, there will be adverse impact on the members. Then you can argue that this new system may create problems. And then you can argue that if this new system reports wrong data to government, government may recall the grant. So by now we have identified 7 risks in this question. Coming to the financial data, we have numbers for 2009 and 2008. Now, we will start some calculations. Analytical review, the revenue has increased from 45 million to 53 million, which gives me 17.7% rise. The revenue has increased by 17.7%. Okay. The profit margins have increased. The profit before tax has increased by 4.6 minus 6.9. 4.6 has increased by 50%. Capital expenditure and associated borrowings. We have done a capital expenditure of $12 million, but our cash balances have declined drastically. Like last year we were at 5.6, now we stand at 1.4. So this gives me a 75% decline in cash. This is a drastic decline considering that revenue has increased, the profit margins have increased, the PBT has increased, but the cash balances are declining. The student can argue that, sir, the company has made a capital expenditure But if you look at this, the capital expenditure was financed through borrowings. And if this is the case, the company is doing over trading, like their revenue is rising, their profits are rising, but their cash balances are in a declining trend. Okay. Then we have total assets, number of sports and leisure centers have increased by 2. Number of members have increased from 33,800 to 38,000. This gives us a rise of 12.4% in number of members. And 108,000 minus 102,600 divided by 102,600, a rise of 5% in pay-as-you-go tickets. Okay, the members have increased by 12, and pay-as-you-go tickets have increased by 5.2%. So this all rise will accumulate into your capacity point. This all will increase the capacity issues. Okay. Now, the revenue is forecast to increase significantly this year. This is largely due to success of the advertising campaign featuring the celebrity athlete and healthy kids program. Okay. The government received a grant of 2 million, with the details of which are explained in Exhibit 2 and has been recognized in full as income. The company's operating expense include the following: marketing cost, maintenance cost, we have staff cost. So you can say that marketing is a fixed cost, maintenance is a fixed cost, because these all costs will create a burden on the company. Like you are spending 8.5 million on revenue, on marketing, in order to generate a revenue of 53 million, which is 16% of revenue is spent on marketing. So you can argue that the company has a very high marketing cost and it will be very difficult to maintain. Then you have a very high maintenance cost. You have a very high maintenance cost. So you can argue that high maintenance cost is itself a problem. Plus you have so much overcapacity matters that it will increase your maintenance cost further. Now, capital expenditure was mostly financed through borrowings. On 1st March, a 10-year 30 million loan was received. The loan does not bear interest rate and is repayable at par of 34. As well as the bank loan, a loan of 1 million was advanced to the company from Managing Director Bob Glider. The terms of the loan include 3% interest paid to Bob annually in arrears, and the capital being paid in 7 years. My point is that you have done a capital expenditure of 32 million during the year, and you took loans of 31 million. Now, if whole of your capital expenditure is financed by borrowings, then I cannot understand that why your cash balances are falling. Despite that revenue is increasing, the profits are increasing, but still your cash balances are declining. So you cannot argue that because we have done a capital expenditure, therefore our cash balances are declining. Because whole of your capital expenditure was financed through borrowings. 2 new sports and leisure centers were opened this year, as well as Coastal and Leisure Center. New center was opened in an affluent area in the capital city. The management information system shows that members visit a sport and leisure center on average 3 times per week. So we are done with the first time reading of the question. Now we have to write 5 business risks in this question. But I think that if a student has read it carefully, he would have found 7 risks in the first page. And then you can argue the 8th risk on cash flow position, that why your cash balances are declining. Okay. So I think that you can easily refer 8 risks. This 12.4 and 5.2 issue will be accumulated in overcapacity matters. Okay. This high fixed cost can be referred in cash flow matters, that you have a very high fixed cost. Okay. Now, so we have identified 8 risks throughout the question, and we have to write 5 risks in order to score our given 8 marks. Okay. So let's start by writing the risk and developing the email. Considering that it is our last question, I want you all to focus. Okay. Now you have one more exhibit, but that is relating to emojis. And we are not doing currently a part relating to emojis. We are doing a part relating to Redback Sports. So we will not be reading it. Okay, let's start. Okay. So let's start writing the risk, and with passage of time, you can understand that how to develop the answer. So you are given 4 professional marks for presentation and logical flow of briefing notes. Obviously, we are responding to this. To Stella Cross, audit engagement partner for Redback Sports, and from audit manager, audit planning for Redback and evaluation. Okay. So let's start up by making a format of an email. Now, to Stella Cross, audit engagement partner, from audit manager, subject audit planning for Redback Sports, and evaluation of accepting potential engagement of emojis. Now, if you read the subject given by the examiner, it is also similar. Okay. Now, we are writing to Stella Cross, which is audit partner for Redback Sports, and subject planning is audit planning for Redback Sports, and evaluation of accepting emojis as a potential audit client. Okay. Now, so coming back to the question, to Stella Cross from audit manager, and then we have a subject. Now we have to write an introduction. Now this is the 4th time we are writing an introduction. In relation to audit planning, for Redback Sports Company for the year ended February 28th, 20x9. Following information is relevant for evaluation of. Now, let's see at the requirements for evaluation of business risk, risk of material misstatement, and then principal audit procedures. Then we have to discuss about emojis also, about accepting emojis engagement. So, refer keyword of each requirement for evaluation of business risk, part A. Part B is risk of material misstatements and audit procedures. Further, evaluation is also done. Further evaluation is also done in relation to accepting emojis as a potential audit client. Okay, so we have briefed up all the requirements, and when we write a good detailed introduction along with 2 from subject, we can get 2 marks out of the 4 professional marks. Okay, now we are going for part A, business risk. And our first risk is risk of non-compliance. Now, why risk of non-compliance? Because you have read that Redback Sports have to comply with the strict health and safety regulation, and the national regulatory body also inspects the facilities to ensure that regulations are being followed and for the company to retain its license. Remember, so the first risk is that Redback Sports Company faces a risk of regulatory non-compliance, of health and safety regulations. Redback Sports Company faces a risk of regulatory non-compliance of health and safety regulations. Now, this is the first part of the risk when you identify the risk. Now, what will be the impact of this risk? Now, you can write that if the company failed to meet the health and safety regulations, it may face penalties, or it may be required to invest further in its facilities to ensure that it complies with those regulations. Okay? Now see, if company fails to meet health and safety regulations, it may face penalties or a suspension of license, in serious cases. Like if it is a serious case, then you can face a suspension of license also. Further, company may be required to invest in its facility, to invest in its facilities to ensure that they meet regulatory requirements. Now see, the whole blue part which I have written is the impact of this risk. First of all, I have identified the risk that we face a risk of non-compliance to health and safety regulations. And then I have discussed the impact of this risk, that if you will fail to comply, then you may face the penalties. You may be required to invest in health and safety you may be required to invest in your facilities to ensure that you meet the health and safety regulations. Now we have to give the evaluative comment. You can give the evaluative comment through healthy kids. Like, due to involvement of kids, we will have a greater exposure of health and safety. Or you can give a reference that the falling cash balances may create a concern for the company to invest in its facilities to meet up the health and safety regulations. Now you can give any evaluative comment. Like, I can give an evaluative comment that falling cash balances by 75% will make it difficult for company to invest in its facilities to ensure that they meet health and safety regulations. Health and safety regulations. Now, if you consider the entire composition of my answer, in the first part, we identified the risk that company faces a risk of non-compliance. In the second part, we have discussed the impact of this risk, that what will happen if this risk materializes. And in third part, we have written an evaluative comment that if this risk, that why there is a greater chance of materializing this risk. So you have written that as the company cash balances are already declining, you face a greater risk that you may not be able to comply with the regulations. Okay. So what you need to learn is that you need to understand the approach, that how I am developing an answer. Okay. Now see. Another risk, weak corporate governance. Now, what can you write in weak corporate governance? Now see, lack of audit committee, and internal auditors reporting to finance director show that company has weak corporate governance. Now see, you have identified the risk that the company lacks the audit committee and its internal auditor is reporting to finance director. This shows that you have a weak corporate governance. Now, what will be the impact of this risk? Now, you can argue that due to lack of independence in company, there is a risk of fraud and error. Fraud and error. Like internal auditor may not identify issues. In finance department. As they are reporting to finance director. Now, obviously, it is a business risk that being an owner of the company, I am concerned that in my company, there will be some irregularities, there will be some fraud, there will be some error, as they are reporting to finance director. Now, you are discussing the impact of this risk, that what will happen. Similarly, lack of audit committee will lead. Lack of audit committee will result in lack of review, of executive directors' performance. There will be no one who will be reviewing their performance. Now, these are the functions of the audit committee, if you remember. Now, see, first of all, I have identified the risk that lack of audit committee and weak corporate governance show, and the lack of audit committee and internal auditor reporting to finance director show that company has corporate governance issues. Then I have written the impact of that risk, that what will happen due to this risk. So we have written that due to lack of independence in company, there is a risk of fraud and error. Like internal auditor may not identify issues in finance department as they are reporting to finance director. Lack of audit committee will result in lack of review of executive director's performance. Now, what can be its evaluative comment? However, it is to note that as company is unlisted, therefore not having CG is not a legal issue. It is a business risk. But you can say that still, it is not a legal issue, that they still don't have a good corporate governance, but still it is a business risk. But this factor reduces the risk by some extent. Okay, so we have identified the risk, we have given its impact, and then we discuss an evaluative comment that not having a good corporate governance is still not a legal matter. Okay, then the third point which we identified was a matter of capacity. Why? Because 3,000 new members of Healthy Kid, 3,766 visitors of government scheme, overall rise of 12.4% in number of members, 5.2% rise in pay-as-you-go tickets. So this all shows that the gyms are over-occupied. We have opened 2 new centers, but still you can argue that sometimes some hours of the day would be too much occupied because there are too many members and the number of gyms have not increased accordingly. Now see, over capacity. Now, Redback Sports have observed a rise of 12.4% in number of members and now please concentrate that how I am drafting the risk, and 5.2% rise in number of pay-as-you-go tickets In addition to this, children are also attending as part of their parents' membership. Under Healthy Kid Initiative. Now see, these children are not part of the members' Healthy Kid program. Further, 3766 visitors also attended under government program under government initiative. This all shows that company may face capacity issues. Two new gyms were opened during the year. But still, rise in visitors is too high. This may make gyms overoccupied. Which will lead to customer dissatisfaction. Now see, I have written this risk, but I have not followed the approach because I had too much data to accumulate. Customer dissatisfaction. Okay, so we have accumulated a lot of data in this risk. If you read that our number of members have increased, number of pay-as-you-go tickets have increased. We discussed about the children also. We discussed about the government initiative visitors also. And then we discussed that this all will create capacity issues. And only 2 new gyms were opened during the year. And the rise in visitors is too high. And as a result, the gyms will get overoccupied and people will be reluctant. And obviously, they will be dissatisfied when exercising in our gyms. Okay. So there is a problem of non-compliance. There is a problem of weak CG. Then one of the major problem is that the gyms are getting overoccupied. Okay. So see, what you need to understand is that while writing each risk, you have to understand the scenario completely. Once you have understood the scenario completely, Once you have understood the scenario completely, you can easily develop a pointer. Okay, let's write up two more risks. Another risk is that company has done too much cash outflows during the year, like they opened a new coastal area, they made an investment in existing facilities of 12 million, they paid 1 million. The total capital expenditure number of the year is $32 million. Now you have invested $32 million in a particular year, whereas your total asset base is 130 million. So 32 divided by 130 gives us 24.6% investment in 1 year. So you can argue that you have done a lot of capital expenditure in 1 year. You have financed it through debt. But obviously you are using up your debt facility at a very fast pace. And this will ultimately end up your debt capacity. Okay, the company is doing over investment. It is investing more than required. The cash balances are declining. In longer run, the company may face difficulty in managing its cash position. Further, you have also spent $1 million on marketing also, in addition to normal requirements. So that will also create a burden on your liquidity. Now see, so you can write a risk on liquidity management, Now, company has invested $32 million during 2009, which represents 24% of total assets, Along with this, $1 million additional was spent. Additional spending was done on payment to athlete. These spendings were majorly financed. Through debt of 31 million taken during 2009. It can be argued that company is using up its debt capacity at a very fast pace, and it may lead to liquidity crisis in future, as cash balances have also declined by 75% and easy source of finance, that is debt, is also used majorly during the year. So your cash is declining, and you have also used up your easy and available source of finance, which is debt. So again, now see, when I've written this risk, I have simply accumulated all of the data. Like you invested 32 million during 2009, which is 24% of assets. You have spent $1 million on marketing, which is also a cash outflow. However, as these spendings were majorly financed through debt, so we said that obviously when you are financing it through debt, your cash balances are not taking up a hit, but you are using up your debt capacity. And once your debt capacity will end, you need to keep it in mind that once our debt capacity will end, you will not have an easy source of finance. Okay, you will not have an easy and an available source of finance to use in times of need. Your cash balances are already declining and you have already used up a bigger portion of your debt capacity. So this may lead to liquidity crisis moving forward. So the first risk was a risk of non-compliance. The second risk was a weak corporate governance structure. Third point was on overcapacity. And the fourth point is on liquidity management. Coming back, the fifth point which you can write is that government has allowed access to unemployed people in their gyms. The Redback Sports has allowed access to unemployed people in its gyms. So you can argue that when unemployed people will be attending the gyms, obviously the members who are paying for it may get annoyed and they may not be able to continue their membership because they will not be having a privileged feeling. Further, those who are purchasing pay-as-you-go tickets were the one who cannot afford membership. So there is one more risk that they may also enter the gym through government initiative. I'm repeating it again, please concentrate. There is a risk that those who are purchasing the pay-as-you-go ticket may now enter Redback Sports Gym through the government initiative, because the government initiative allows everyone 3 hours free access per month to those who are unemployed. So there is a risk that if someone was earlier purchasing a pay-as-you-go ticket, may now enter the gym through government initiative. Let's write this risk. Government initiative or the government scheme. Now see. Redback Sports may lose revenue from its members and pay-as-you-go sales due to government initiative. Members may now lack feeling of being privileged, members may now lack feeling of being privileged by attending Redback Sport gyms, as now as unemployed people can also access same leisure facilities leisure facilities as of members. So now there is no point of paying such a high membership fees, because there is no feeling of being privileged. Because earlier you were the one who can afford those services, but now the unemployed people will also have access to same facilities. Further, pay-as-you-go sales may also fall. Why they may also fall? As some of the visitors of pay-as-you-go may use government scheme, as some of the visitors of pay-as-you-go may use government scheme to attend Redback Sport gyms. Okay, the market is competitive and you may face a bad impact on your reputation. So Redback Sports may lose revenue from its members and pay-as-you-go. Why? Because the government initiative may reduce the impact of feeling privileged by attending the Redback Sports gyms. And obviously, the pay-as-you-go customers may also use the government scheme, because they will also get free 3 hours access per month. Okay, now. So we have written the 5 risks, but still you have some good risk. You can write that as a new data management system was introduced during the year, there is a problem that due to this new data management system, the data may get wrongly analyzed, and as a result, the decisions of the management may get affected. You have a risk that if this new system will report wrong data to the government, then government may recall the grant on the basis of lack of integrity. You can write a risk on liquidity, that despite of rising revenue, rising profits, and rising margins, your cash balances have reduced by 75%, which is a concern that why your cash balances are declining. So you still had 3 risks which you can add up in this question, okay? Okay, so what you people need to understand is that if you have understood the question in a proper manner, you can easily write up the risk. It's not a big deal, okay? Now, we have done 4 questions till now. In business risk, I'm winding up the topic. This was the first topic in audit planning, and I hope that you have understood the writing approach. Or I have focused too much on you to understand that how I'm developing the point rather than understanding a particular point. Because if you will learn the approach that how I'm writing the risk, then automatically you can deal with all situations. Okay? The first risk was, the first question which we did was Grohl. Second was cannoli. Third was Dove. And the fourth one was the huntsman, which we did now. Now, these are the 4 questions which we did as classwork. Now, I'm giving you 3 questions as homework. The first question is Julie Company. The second question is Chambers Company. And the third question is Mitchell. I have attached all these questions after my worksheet. Like this is Julie Company. This one is Chambers Company. And this one is Mitchell Company. Now I want you all to attempt this answer and get it checked from me. Send me the answers, scan a good PDF, send it to me, and then I will give you a feedback. Okay, now you need to purchase my P7 booklet. In my P7 booklet, we have last 20 attempt past paper solution. Now the benefit is that when I ask you to read the answers, I always say you that read the examiner answers of all these questions. So you people have asked me that, sir, we cannot find answer of Grohl, we cannot find answer of Connolly. So obviously it is very difficult for me every time to send you an answer. Okay? And it will also be embarrassing for you to every time ask me the solution that please send me the answer of this question. So if you people can send your address details, so we can send you this P7 booklet. Obviously it will cost some minor amount, but along with courier charges, but you have to bear it because without it, it would be very difficult to continue with the session. You will have last 20 attempt solutions and you will have accounting standards, summaries and everything and all the stuff which we will be using throughout the course. So, and the exam technique and everything else will be included in this book, okay? So, what I expect from you people is that you need to start doing the classwork questions. You need to review the questions of the examiner answers of the questions which we did in class. And you need to start doing the homework. For booklet, you can send me your address. So I will make sure that our administration sends you a courier. First, I will communicate you the charges, that what will be the charges of the courier and the book. So if you once confirm it, I'll send it, okay? Obviously, we cannot share a soft copy because it is against our institution policy. So only thing we can do is that you need to take a hard copy of the book, okay? Now, so if I'm winding up the first topic, audit planning, we start the first area in audit planning, that was business risk. So we are done with 4 questions and I have made sure that we discuss each and every question and we write an answer like a small kid. I have made you identify the 3 areas of each risk so you can understand that how I am writing it, okay? What I expect from you is that you need to review the examiner answers and everything, okay? Now from the next class, we will be starting a new topic, which is risk of material misstatement, okay? So see you all in next class, and I hope that I will get the homework before the next class. Thank you.